Hey everyone, today I want to talk about meta platforms, formerly known as Facebook. First, I want to talk about why I think Facebook is drastically undervalued based on the numbers. And second, I want to talk about a strategy, which I have highlighted in my last two videos, of how to make up to 10% in a month on Facebook. And the stock can even go down from current levels. So it's a pretty cool strategy. I call it the AirBNB Options Trading Strategy because you're essentially buying a long-term asset, renting it out for a period of time, 30 days or so, and collecting rent essentially. And you can rinse and repeat month after month. So I'll get into that a little bit more towards the end of the video. So you can see on my screen, you can see how Facebook is been punished severely because growth is slowing in their user numbers and the potential competition with TikTok, right? But I think those fears are overblown. Facebook's actually investing aggressively as well, which will put a kind of the brakes on profitability. I mean, they are very profitable, but as far as increasing profitability, so they're essentially taking their profits and they're reinvesting it in the business, particularly on the metaverse, right? They've got their VR, AR initiatives. They're spending $10 billion a year, but it's an opportunity that only Meta can really go after, right? How many companies can spend 10 billion a year on something like that, chasing something like that, and still be super profitable, right? I mean, spitting out cash left and right. So you can see that the advertising revenues have still been growing, over time, right? So it's not like we're on a downtrend now in growth. And then if you look at my favorite website, those of you who watch my channel know I love this Finbox tool. You can see quantitatively they're pegging a approximately $360 fair value, which is about 65% upside from today's prices. And they're basing that off 14 different models. Here's the different models that they're using to determine the fair value of Facebook. Even if we eliminated this kind of outlier up at the high end dividend multi-stage model, still $345 fair value, about 60% upside from here, so nothing to sneeze at. And you can see free cash flow yield, 6.6%. It's much better than a bond, right? Even though bonds have gone up quite a bit as far as the interest rates lately, over 2% for the 10-year. You get 6.6% on a arguably growing company, right? In 10 years from now, should be much higher in my estimation. And if we look and click in here at the free cash flows for the company, last year in 2021, they had nearly 40 billion of free cash flow, which is quite a substantial amount of free cash flow, especially for a company that's trading for about $550 billion in value. If you can see here, got the enterprise values of $540 billion, right? So that's the cost of buying the entire company today. So that's the valuation of Facebook in a nutshell. Now let me go over, and, it's substantially undervalued. Now I'm going to show you a strategy that's, in my view, somewhat conservative. And still make a decent return. Once again, I call this the AirBNB Options Trading Strategy or method. I guess you could also call it like the Turo Options Trading Strategy. Airbnb, Turo, those are two different platforms where you can take an asset and rent it out short term and make some cash. We're just doing the same thing with stocks. So you choose your underlying asset, which is a stock, preferably of a solid company that's not in danger or jeopardy of going bankrupt. That's got a compelling valuation, so downside is limited, and you're going to rent it out using options. So what I've got on my screen here is profit loss of this strategy. So essentially, another name for the strategy is a diagonal call spread, sometimes known as a poor man's covered call. So if you're familiar with covered calls, this is you could do a covered call, right? So you could buy 100 shares of Facebook, and then you could sell calls off of it. That would be very similar to my strategy. But to reduce costs, especially when you're not in a margin account, I am buying a deep in the money leap option. So in this instance right here, you can see down here at the bottom of my screen, I'm buying the 150 call. And if that expires a year from now, so about March 2023, and I'm selling a call that expires in 30 days from now, April 22nd, 2022, 215 call. So you want to sell like right around at the money. So today, for example, Facebook, if I switch over the chart here, this is a little bit messy, but Facebook is trading around 213.46. So I'm doing the 215 call, which is right at the money. And let me just show you what I collect for that. So if I go to the option chain for a 215 call, I collect about $845. It's right between the bid and ask. This column actually shows me the extrinsic value. So for an at the money or out of the money option, 100% of it is time value, also known as extrinsic value, the opposite of intrinsic value. So I'll collect about close to $850, right, for selling that call. That's the rent that you're collecting. And your asset is that 150. So we're in the March chain now. The 150 call, we're buying that for about, less than $7,500, right? So net, I'm spending $6,653 right here. And for $6,653, I can put on this trade. And here's the profit loss. So if at expiration, meaning April 20, end of the day, April 22nd, my option is right at 215, then I will make approximately $840, this is saying, right? Which makes sense. That's about the premium that you collected from that short call, at the money call. And my break even is 204.80. So the stock can drop all the way down to 204.80, and I would still make money. Anything above that, right? So that's why I say this is a pretty conservative strategy. You have some downside protection where you're still profitable. The one downside, though, to doing a diagonal call or poor man covered call as opposed to a traditional covered call where you're buying the shares instead of a leap option as your asset, is that you got this downward droop generally, unless you go super deep in the money, because this long option is not going to appreciate in value one-to-one with the stock. It's going to be pretty close. It's going to be like 80, 85, 90% the same appreciation as the stock, but it's not quite 100%. So as the stock price goes up, if it goes up to 250, your profit's only about 437, right? Instead of the 840. So the max profit, you're making more than 10% return on the $6,600 trade, right? You're making like more of a 13% return, 14% return, right? But if the stock goes up substantially, it's up to 250 within the next 30 days, then you're only making like $400, which is still nothing to sneeze at. It's still, more than a 5% return. So, which, if you think about it, what other assets can you make 5% on per month, or almost, more than 10% on per month, right? So, but what you could do, and sometimes I do, if I don't like this downward droop, you could, if you still didn't want to do a traditional cover call, you could just buy a few shares of stock. And for example, if I bought 10 shares of Facebook stock, then you can see it's pretty much a flat line in that anything above this 215, I'm making $800 or so dollars, and then if it gets really high, I actually make more than that. So you can solve that issue by buying some shares of stock. That's always going to cost you additional money, so that would be an additional $2,140 to buy 10 shares of stock. But those shares never expire, right? They're perpetual assets that last forever as long as the company is solvent, right? So I'm not really concerned if it's a solid company buying a few shares of stock to try and eliminate that droop. And what you could also do is, let's say you wanted to protect your downside a little bit. Here I'm doing a, you can see, this is probably hard to see on the screen, but I'm buying the 210 put, selling the 200 put, so that's a put spread, right? And I'm actually also selling the 190 put and buying the 180. So this is what's known as a butterfly spread or an condor. This is technically not a butterfly, but similar to butterfly. And so you can see this is the profit loss, right? So you get a big bump. You make $782 if you're anywhere between 190 and 200. Your break even is 182 and 207. So this is only $218, and it gives you some protection on the downside, right? If the stock goes down into this range, you actually make money on that spread to offset your losses on this diagonal spread. So if we combine the two, right, you can see my break even goes down to 195 from 204.90, right? So I almost get a $10 additional buffer room. The downside is it does reduce your max profit from the $800 level to the $600 level because you're paying $200 for this protection, right? So you're spending about 25% of the premium you're collecting to put on this protection. So it just depends on your view of the stock. If you're nervous and want that downside protection, then it makes sense to do it. And then if I add in those 10 shares of stock to flatten out the lineup here, right, you can see pretty much making about $600 anytime the stock's above 215. Anytime it's above 200, I'm still making around $200, and my break even's down at 197 if I add those shares. So, and you can do this, month after month. So the next month, let's, April 22nd comes around, the call expires, maybe it expires worthless. You could go ahead and sell another 215 call, right? Or maybe it's gone up a little bit and you're going to sell a 220 call or the 230 call, whatever the at the money call happens to be. And you keep collecting premium month after month. You do that for a year and you can have substantial gains. So I like doing this much better than being like a real estate investor or Airbnb investor or a Turo investor. I prefer to do this from the comfort of my own home, just a few minutes here and there. If you like what you see, if you're interested in learning about this more, feel free to subscribe and like this video. And if you are looking for ideas, I'll keep posting videos, but I also have a Discord group that I'm starting to share ideas. If you're interested in that, please comment. I can talk to you about it. Anyway, have a great rest of your day.